and welcome to everybody that is online. Thank everybody for joining us. For those of you that don't know, we have recently started live streaming, and all of our events are also online. So, as much as we love for you guys to come and attend in person, if you can't, you can join us online. So, welcome to today's event where we're going to be talking about the future of Bitcoin. As we all know, there's a big significant event coming up today. We're going to be talking about, we've got an expert that's going to be talking about the Bitcoin and the halving and the impact that is going to have on the future of Bitcoin, not just the price of Bitcoin. All right. I'm going to do a quick little rundown with some announcements. I'm going to bring up my partner in crime, Matt. He's going to talk about some upcoming events. Then we're missing here the presentation. Then we're going to have Daniel coming up to present. We're going to open up to Q&A. So if you do have some questions, if you can please refrain until the end of the presentation, and then we'll go into some Q&A. And then, as always, we'll finish the night with some more networking, and you guys can drink the bar dry. All right, all things blockchain. For those of you that haven't been to one of our events before, All Things Blockchain, I founded it in November 2020. It is a fully nonprofit run and organized by a community for the community. I think somebody must be downstairs. I forgot to give you my phone. Yes, thank you. Sorry. One job, right? Okay. So, All Things Blockchain, founded in 2020. It wouldn't happen without all these volunteers, so I always like to acknowledge them. We've got quite a few of them in the room, and they all make this possible. We're always looking for more volunteers, so anybody that wants to help out or contribute, none of us get paid for everything that we do, so just anybody that even comes and helps, whether it's on the door or putting food or drinks out, so it's these people. I drive it, but I couldn't do it without these people, so I always like to acknowledge them. Also, all the food and the drinks that you're enjoying for free, that comes from the sponsors. So we always like to acknowledge them. We've got some pretty big sponsors that have been backing us. Labris have been sponsoring us from day dot, same with Binance for the last 3 years. I'm not going to go through all of them. If you go onto our website, there's more information on each of these sponsors, and they all individually offer to help kind of support the community. Tonight's event is sponsored specifically by HashX, who I'll bring up Daniel, and he'll explain a little bit about HashX in a moment. So we also do collaborations. We're focusing this year on really growing and kind of expanding outside of Brisbane. And so we've collaborated with Off-Chain. So anybody that likes to travel and you want to go and find some events that are overseas, please go to the Off-Chain site, because they run like global events. So we're basically partnering up with them to be their Brisbane chapter, but they have chapters all over the world. RFox is the metaverse that we are patiently waiting for it to be completed, and then we'll be hosting all of our online events inside of the metaverse. Women in Digital Economy is my new passion project that I've recently started, and that's more educational focused and around bringing more mentoring and inspiring more women to enter in the space. And Women in Blockchain Australia has been around for ages, and so we just collaborate with them. If there's anybody out there that knows any other types of communities projects, we'd be happy to collaborate with them as well. This is new and exciting. Okay, so last meetup, didn't realize we didn't have the QR code working. If you were here, it works this time. Okay, so we have one of my students, Jess, helped me. I had this idea because I get so many resources and so many different projects, and I'm like, we need to put this somewhere. So it started off as like a resource for my students, and then I thought, oh well, this probably actually be a really valuable resource for the community as well. So it is a directory, and if you scan that QR code, you can get access to it. But it basically, she's broken it down into, and we've just given you an example here. Okay, so you want to learn more about, real world assets or loyalty reward programs or real estate or gaming or whatever it might be, and she's broken it down into different categories, and we vet them somewhat. She goes and makes sure that they're like not some dodgy scam coin, and we just put them on there. So it's just a resource. It's just a tool for you guys. And if anybody in this room has a project that they would like to showcase, you can also scan that and you can let us know about that. and we can get your project up there as well. So that's new and exciting. Now I'm going to bring up my partner in crime, Matt, who's our community manager, and he's going to take you through some upcoming events.
All righty, just a few quick ones from me tonight. Welcome, everybody. Thank you for coming out again. Oh, I don't know if you need to clap. I haven't done anything yet, but no, I appreciate it. I appreciate it. I do need a bit of a lift. Oh, I see. I thought it was after you'd left. This could turn into some sort of comedy routine. Next week, Danielle has been running. She literally is running 24/7 at the moment. And one of the things she's doing is running these excellent Ask Me Anythings online. Next Monday night is the next of them. It's at 6 p.m. Brisbane time. Thank God next week daylight savings comes off interstate as well. For those of you who are doing business interstate, oh my God, it's such a relief. I even had confusion tonight over the start time of the Zoom call. So, you know, it's I know it's a necessary thing apparently. So next week, Monday night, Danielle will be talking to Amy Rose Goody. Amy Rose is one of our very good friends in the industry. She's the Chief Operating Officer at Blockchain Australia. Many of you probably know Amy Rose. She's an industry veteran, but also very widely experienced in all manners of digital technologies and many things, actually science generally. Very interesting chat. That will be talking about building a career. That's on Monday night coming up. That is on the All Business in Blockchain. That's on meetup.com. You should be getting pinged by meetup.com with suggestions about that. Announcing next month's events. For those of you who are regulars, it's out of band. It's not on the usual first Wednesday. Please note, it's actually, we're skipping the first Wednesday and instead moving to the third Wednesday, I think it must be, for the marking of Bitcoin Pizza Day. So we're going all Bitcoin these couple of months. So that's a special announcement. More details to come on that probably early next week. Sponsored by our good friends at BitGet, with whom we work quite closely. So really looking forward to that. We'll be announcing that on Meetup very shortly. Speaking of events, Blockchain Australia, primary advocacy body for blockchain tech in this country. They have a calendar of events nationwide now, and it's really worth checking out. You can find it at that website there, or just go to blockchainaustralia.org and you'll find it listed across the top there. It is actually free, or easy for you to upload your own events. I think they do vet them slightly, but I notice all sorts of events. Sydney DeFi, Sydney Blockchain Meetup, a whole heap of events. They were doing something with Cardano this week. Their event was up there. Also coming from Blockchain Australia is Blockchain Week. It's now just over 2 months away again. blockchainweek.com.au. More details we're still waiting on. I'm sure they're organising that literally as we speak. It's going to be, it's not a sort of a stand-up talk fest. It's not a conference in that sense. They do a whole variety of educational and other activities. There's also going to be some sort of debate, which I assume about blockchain, to be hosted and held at the New South Wales Parliament, I believe. So quite an interesting week. It's usually an awful lot of fun, and it's entirely in Sydney this year though, so will involve a little trip down to Sydney to go to that one. blockchainweek.com.au. I think that's just about it from me. Discounts, we've got our friends at Stables. This QR code is also working, I believe. The friends at Stables have a little sign-up discount there. I don't know if you know the Stables story. They're well worth looking up. Recently launched in Philippines as well. They've got a heap of good stuff going on. Stable coins allowing you to spend your stable coins using what is essentially a MasterCard. But it's very interesting how they're pulling that off. And without much further ado, we're going to hand over to tonight's speaker, Daniel Leslie, ex-#X, but now wearing a slightly different hat. But he's going to talk all about Bitcoin, the halving, and Bitcoin mining. So big welcome. Give him a clap, not me. Give him.
You can give Matt a clap as well. Oh, thank you. Yeah, I'll need this, otherwise I'll get lost. Hey, good evening. How are you guys? How's the, what is it, Wednesday, hump day? You're feeling alive? The drink's starting to get a bit of buzz on? Awesome. Hey, well, my name's Dan, although more formally Daniel Leslie. I literally up until a month ago have been working with #X, which is a mining supplier of hardware here in Australia, and also #X runs hosting farms all over the world. Now, over the last month, since Danielle booked me, I've actually transitioned to an awesome new role. We're actually working with a large Bitcoin miner. It's still a little bit under NDA, so I might be able to tell you more about that later if either catch up with me or you see Danielle from time to time. I might be back to talk about some big, exciting Bitcoin projects at some point. But from that point of view, from me personally, I've been involved in Bitcoin mining since 2017. So this has been my third cycle, nearly fourth, complete Bitcoin cycle. So I've kind of made all of the really bad, mistakes. I've made all of the bad misjudges. I've kind of bought all of the best mining projects ever and got wrecked on them. So I've learned a lot of tough lessons. So a lot of what I'm going to talk about tonight is definitely going to be surrounding the halving, which is obviously at top of our minds at the moment. Probably one of the things people in our industry think about and plan the most. And obviously, moving out of just a pure sales and hosting business and into a large Bitcoin miner, even more so. I mean, we basically obsess over it, how we get around the halving, how do we solve all our problems, how do we remain profitable, how do we still keep hashing Bitcoin and making money, when we know that half of our revenue source is going to disappear from one block to the next. So it's a super topical thing to be talking about at the moment, and I'm really privileged to obviously share some of my experience, share some of my wisdom. There's some things I know, there's some things I can give you my best guess on, and there's some things where you might have a question, I'll be like, nobody knows the answer to that. I'm really sorry. I can spitball, I can pretend I know, I can try and look enthusiastic, but I like to be really honest with people when I don't know things. So you're definitely going to get me probably having some questions, and I'm like, I might be dead when that happens. So let's go for it, shall we? So I kind of titled this a bit like clickbaity, because I like clickbait, get everyone's attention. Winning the halving in 2024. So I'm going to look at briefly have a look at 3 market participants that have historically done really well out of halving. So the whole idea is, like, if you know that those people, you kind of copy the people who are successful, right? And it took me a long time to get patient and to get mature and to have lost enough money to not want to lose anymore. So this is not financial advice. This is more like witnessing financial pain. And then we're also going to have a look at a technical level. What is the halving? And then obviously how that pushes Bitcoin out into the future, and how the halving is actually probably the most significant event by far in the Bitcoin ecosystem. And because Bitcoin at the moment is so dominant in the whole crypto ecosystem, it's probably the biggest economic event in the whole of the crypto ecosystem as well. So let's get going. What is the Bitcoin halving, first and foremost? So it is the way Bitcoin becomes scarce over time. What it does is it halves the new supply of coins. How do I go back? There you go. So this doesn't happen by people voting. It doesn't happen by a hard fork. It's not an upgrade to Bitcoin. It's been there in the code since the first block of Bitcoin. So Bitcoin hasn't changed. It's not changing when the halving happens on whatever block number it's ready to hit. But it is part of what makes Bitcoin. It's in the very, very code base. So we know that it's going to happen. Do with that information what you will, is basically kind of how it works. So it occurs, as a mistake that I should have picked up, it actually happens every 210,000 blocks. So if you multiply that out by 10 minutes, it's about every 4 years. So, Bitcoin, there are 21 million, and that 21 number kind of appears multiple times in the code. So it occurs every 210,000 blocks. And each of those periods is called an epoch. So if you ever hear, crypto people talk about epochs, what they're talking about periods of time where the rewards for mining, in the Bitcoin sense, were the same. That's literally all that means. So you've learned some fancy, cool tech jargon today. And it affects the base reward. So what the base reward is the incentive for people like myself to put mining rigs online, put highly powered computers to do maths to keep Bitcoin alive. So what we're racing to solve is the answer to a mathematical question. And the only way we can get to it is by guessing. And so we put on these really loud, hot, expensive number guessing machines. And we hope that we're going to win a block. And, statistically, if we join a pool, we get a pretty good chance of winning a block. you know, and getting sharing in a lot of that reward. And the longer we do that for, we can usually be able to mine the new Bitcoins that get created at the cost of our energy rather than paying the cost of the market price of Bitcoin. So once we know what our energy cost is, we actually cap the cost of Bitcoin from our energy, because that's not, you know, that doesn't change with the market. That changes on how good our contracts are. So this is what it's called to perform proof of work. And that's that process of constantly guessing numbers. That means that we are protecting the network. I won't go into the super nerdy stuff of how all that works, but needless to say, it's that constant hashing that is what creates security on a proof of work network in the Bitcoin network. So this here kind of gets cut off. I tried to fix it on this one, but it didn't. So this is a logarithmic chart of the Bitcoin reward. So it starts off up here. This was the first epoch, you know, the first 210,000 blocks. We were rewarded 50 Bitcoins per block that you found. The first Bitcoin block was mined by Satoshi on his laptop at home. And he apparently has mined over 1 million Bitcoins that we know in Satoshi's original wallet. That were just mined on his laptop and a few other computers that he had around the house. So you go back in the Bitcoin network, there was so few people competing for tons and tons and tons and tons of Bitcoin that was available just then. And every epoch that halving has happened, that has often what has been the catalyst, the lack of supply of new coins coming in, combined with obviously the increase in the popularity of Bitcoin over time, has been what's caused these big price pumps. Back then, there was no market for Bitcoin. It was fun money. You know, we're going to have Bitcoin Pizza Day next month. Someone paid 20,000 or 200,000 Bitcoin for a pizza? Yeah, 20,000 Bitcoin for a pizza. You know, back then it was what, you know, only a few hundred blocks. That's fine. We'll just plug the computer in when I get back home. Where obviously today Bitcoin's a global asset, is kind of making its way into being a a store of value, and is making all the investment kind of narrative that now surrounds Bitcoin, and obviously is a heck of a lot more valuable. So that halving cycle, and we can see it going forward. So when we go right down this avenue here, we're talking out to literally 128 years into the future. So approximately 2148 is, or 2142 is where the last Bitcoin will actually get mined. So the very last Bitcoin that will ever exist will come off, will come out of the code, the potential Bitcoin, and be rewarded to a miner somewhere along the way. But that reward cuts down. So when we look at the future of Bitcoin, if you were to look at this on a real supply chart, it would literally be, a non-logarithmic chart. It would be getting smaller and smaller. So basically, the time we get beyond the next couple of halvings, it's literally just a flat line of ever decreasing amounts of Bitcoin that you probably have, if you own some Bitcoin, you probably own more Bitcoin than the last block will be rewarded to a miner. So you got to think about that. You are probably holding the last miner's block in your Bitcoin wallet, which is pretty crazy. All right, so let's look at some people who win usually out of halvings. So the kind of investors or kind of market participants that are usually successful, hodlers and DCAers. And it's not just to get a round of applause if you like to hodl, or you've been dollar cost averaging through the last dip. It's one of the most significant parts of Bitcoin economics. So Bitcoin's a scarce asset, and most of the investment thesis around Bitcoin is that there's only 21 million of them. They can't be copied, they can't be pasted. I can't take yours, Matt, and put it in my back pocket. Oh, it's financial advice. I could try. No. So in terms of investment, in terms of the economic system, a lot of Bitcoin is held by people who are never going to sell and who are always going to hodl. Yeah. Oh, sorry. So it's actually encoded scarcity via the halving. So because the new coins get harder and harder and harder to make, over time, people are willing, like particularly us miners who have to pay an electricity bill. And when you go out to the institutional level, that bill can be hundreds of millions of dollars of electricity every month I'm not talking every year, every month. And so there are real world incentives for us to not let our Bitcoin go if you can't pay our energy bill. Otherwise, miners around the world go bankrupt. And sometimes some of them do. And that creates market opportunities. So rare things tend to become more valuable, pretty basic economics. And as Bitcoin becomes harder to mine, it also becomes harder to purchase and to acquire. And I think we've seen this little glimpse in the way the market has responded to the ETFs over the last couple of months. We've seen the supply on exchanges shrink, and we've seen the price of Bitcoin go a lot more than I thought it would. I mean, we hit a new all-time high in the last month. And so you imagine that that played out into 2030, 2040, 2050, where, you know, it's not that there's 2 million Bitcoin that maybe are on exchanges that could be traded, but there's 200,000 Bitcoin on exchanges that could be traded, to 20,000 Bitcoin that could be traded. Suddenly, this market becomes really, really, really valuable. And so even a smaller amount of Bitcoin makes it more enticing to get down to. So halvings are usually the market, the market event that drives bull markets. Traditionally, it happens about 6 to 12 months after a halving event. It takes time for everything in the market to kind of come to an equilibrium. And it increases users, investors, and attention for Bitcoin. So I always say, look, the best marketing, Bitcoin isn't a project per se. It's a commodity. It's a bit like coal. It's pretty boring. It just runs by itself and no one builds on it. It is what it is, and its only marketing that it can ever get realistically is its price. And so it's being a high price usually means people pay attention to, oh, that Bitcoin thing. I'm sure you've got some friends who like, hey, you still into that Bitcoin thing? You've probably had that conversation a few times, you know, over the last few months. It goes into the news again, and then all of a sudden you're like, yeah, should have listened to me 2 years ago, 4 years ago, 6 years ago, etc. Awesome. Let's look at this. So miners with a power edge. So again, I've kind of harvested this for a presentation of like giving a presentation to miners. And so I've put in there miners with less than 11 cents per kilowatt hour in a price. So this is all Australian dollars, by the way, not US, because we're all Australians here, apart from those of us who aren't. With the current network hash rate, so that's the total number of miners on our network, if the power bill was more than 19 cents per kilowatt hour, no miner is making any money. So off the top of my head, that's about 12.5 cents US. And so this really brings out the relationship that Bitcoin has to energy. Bitcoin now is not so much a financial bit of software as much as it is people have taken electricity and hashed it into the network, and people are buying the energy cost or the difficulty that it was to acquire that Bitcoin. So people make, like a miner would make $0 if they're paying 19 cents per kilowatt hour. Most of us in our homes are paying a lot more than that per kilowatt hour now. It's 25, 30, 40 cents per kilowatt hour, which to me signals quite clearly and probably has been made very clear over the last few years. Bitcoin mining at home is dead unless you're really going to do some fun stuff. Like I started off with a miner in my lounge room, deafening my housemates to death until they completely just had it like burst into my room one evening. It was just like, you turn the thing off or you're going. So yeah, I learned a few fun lessons in the early days. But I could still make money just plugging it in at home, paying, I kind of bribed my mates, like, hey, I'm going to buy this miner. We'll plug it in. I'll pay the power bill, the whole power bill for the house. How's that? And he of course thought it was a great deal at the time until he realized how loud it was. So when nowadays there's no way I could do that. Bitcoin's too difficult and it's too hard to get. So miners with a power of less than 7 US cents or 11 AUD per kilowatt hour, and then kind of I've done some calculations. I've got some cool spreadsheets that I have to do for work. You look at the efficiency rate of all the average hash rate out there. That's kind of where the line is between projects that will survive, mining projects that survive a halving, and mining projects that die. So once we get to the halving process, people who have a power bill of greater than 7 cents, and would you believe that that's probably more than 40% of miners? That, and I'm talking big miners, have a power bill higher than 7 cents US. They are now going to be close to or close to being unprofitable. So they're on a margin call for being like, hey, you have to switch off. Or hey, we're not making any money out of this anymore. You know, we need to turn off. So that affects things really interestingly. And I'll talk about how that affects things when I talk about the network hash rate, because that's super important to understand. So these are some really key points. So most projects I know are targeting 7 cents. Most of the really competitive projects are trying to target below 4 cents. And the cool thing about this is that it'll go into our next point. Bitcoin is actually making the cost of power cheaper for people across the globe, because Bitcoin miners are spending their own time, their own money, their own capital on trying to make things like trying to get power cheaper, trying to get power at less expensive rates, digging rubbish, or taking methane that was created by rubbish out of the ground, turning it into energy, making energy from waste. A lot of Bitcoin miners are behind that real push and that real move, because it's like, well, how can we get energy that we can always be competitive? So the future of Bitcoin mining, if you like, is inventing new energy sources for the human race. And the ones that we leave behind can then power human life at an ever cheaper rate. So we've got some cool case studies on that. So the big number that everyone wants to get to is the average power markup ratio, which means how much Bitcoin do I get out of $1 of energy? So anyone in the industry who's got a ratio of more than $1 in, $2 of Bitcoin out is usually halving safe. So that means the halving happens, you're into $1 of Bitcoin and $1 of energy in and $1 of Bitcoin out. But we'll talk about some other things with network hash rate that usually mean you can survive through the period of uncertainty straight after a halving. So does that make sense, by the way? I'm not just saying random words. Power markup ratio, $1 of energy in, $2 Bitcoin out, it should be okay. There you go. Sometimes people get confused us. So the global energy consumers, we'll talk a bit more about this. So Bitcoin getting harder to mine is actually amazing for energy. So I was chatting to someone before about great filter theory. You know, the human race goes through different filters. You know, like we get nukes, we don't kill ourselves, we get to progress to computers. We get AI, we don't kill ourselves, we get to progress to, I don't know, faster than light travel. Or it's a theory. In some ways, every 4 years of a halving is like a great filter for Bitcoin miners, and it's a great filter for energy costs. If we go back to the last halving, Bitcoin miners would have been happy to jump on energy prices ludicrously high. They would have turned off, you know, people could have been green enough to turn off hospitals to mine Bitcoin because they could make so much profit. These days, Bitcoin's so hard to mine. Again, we're inventing new energy sources. I was literally last week on a site that is taking methane out of the ground that would just be burned off in the atmosphere, turned into electricity to make Bitcoin, because now it's more profitable to do that. It's the only way, you know, this tiny little generator can really make any money. We'll get to it in question time. Save it. It's gonna be a good one. I like getting interrupted, but I've been under instructions. So Bitcoin miners are incentivized to find cheaper energy sources globally. And believe me, at the moment, I'm looking all over the world for stuff. So over time, Bitcoin puts a downward pressure on energy prices, making it more affordable and more abundant. So if you think about what's happening in Texas, there has been a massive incentive to overproduce energy in Texas because there's so much Bitcoin mining there. The benefit of that is Texas, before this mining boom, was having real problems with their grid in terms of balancing, in terms of their pricing. Sometimes it'd be way too high, sometimes it's way too low, and you're damaging the grid. And Bitcoin mining has come in and levelized the cost, and more than that, has created this incentive to have a massive abundance. So rather than having these super high peaks, Bitcoin miners now just turn off and the energy goes to the grid, because sometimes it's better for a miner to get paid to turn off and give the power back to the grid cheaper than they could make it previously before there was a mine there. It's fascinating the way the economics work. So that's how a halving can really benefit energy consumers. As Bitcoin becomes larger and larger as an energy customer, it's already pushing the markets for energy to become more and more efficient, because they're quite old. You know, the people I spend more of my time talking about energy purchases than I do about cool blockchain tech. You know, I'm like, I feel like a dinosaur sometimes when I see people and when I talk to people in the cool industry. I'm like, man, you're doing such cool technology stuff. I'm talking to old guys about how they can like sell me power out of a transformer that's 30 years old, has only got 10 years of life left. You know, that's my job most of the time. But it's so fascinating that I think it's already getting some of these big old institutions, which is energy, it's a very old, it's 100-year-old industry, and we're getting it to rethink, hey, how can we be better? How can we actually meet the needs, especially of a grid with renewables on it, especially with the demands that we're going to need for energy over the next, 100 years of people wanting to become energy consumers. Let's have a look at this. So network hash rate numbers. So in 2024, Bitcoin keeps hitting all-time highs, not just a price one. This was from about a month and a half ago this point. So, and we hadn't yet hit an all-time high, but now we actually have hit a price all-time high. So you can ignore that. But the network hash rate as well, which is the total number of miners online, keeps hitting an all-time high. So network hash rate is really the one thing that you want to look out for if you're intrigued by what happens in a Bitcoin halving. So network hash rate is this amazing number that, because everything's decentralized and everything's open, we know exactly how much work went into the last block. So in real time, we can tell you approximately how many miners are actually online or were online for the last 10 minutes. And this number keeps going up, keeps going up, keeps going. And I have this principle: if Bitcoin mining is profitable, more people want to do it, right? And so a halving usually has the effect of culling this network hash rate. It usually has the effect because there's a lot of mining that's going on right now that's old hardware, that's past its ROI time, but because all the prices just went up, a lot of these people are like, well, hey, rather than us spend our $10 million now, let's use the old hardware that we have had sitting in the garage for the last or the big shed for the last 2 years. Let's turn it on. Let's give it its last month or two of spurt, see how much more Bitcoin we can get. And then once the halving goes, we'll turn it off. And 6 months later, we'll replace it with the fancy new stuff. But until then, it's going to be online. And so we're going to watch this number. This is the number that gets affected the most by Bitcoin. There's been some halvings where it's gone more than half the network hash rate has disappeared, especially earlier halvings where it's like a cut from, 25 down to 12.5. That was a really big, network. We also in the last halving we also had COVID crash happen about the same time as the halving. So we also saw another big drop in network hash rate around then because suddenly everyone's like, hang on, there's a halving. Our miners became super unprofitable and the world is dying. Quick, sell your Bitcoin. And so there was a big, more than half network hash rate. This time, everyone's like, this time it could be different. I do think this time potentially it could be different. There's a lot of very profitable miners out there, thanks to the price, thanks to low energy contracts. But there is always a big number that do have to turn off. And that, again, this is where I say I don't know. I'm planning on a 15% drop. It could be as much as 30, but for those miners that stay online, you're rewarded because you don't have to share that new reward with as many people. So you can stay profitable through a halving by actually forcing, or other miners being forced to turn off around you. Does it make sense for people? Hence why I say if you're at 2-to-1 on your power markup ratio, and then you get chopped down to level the day, the block after, as long as 15% of people turn off, you get a little bit of profitability back. So it's not a true halving of your income. It's more like a 30% haircut, or it could be a 40% haircut, depending on how many or how few people turn off. If we go by tradition, or, kind of the history, it's usually 35 to 40%, or, outside of the COVID stuff. So let's hope there's no COVID crash coming. At least I don't see it happening. Awesome. That makes sense for people? Awesome. Cool. All right, so I'm just going to go through 5 things very quickly when I think about mining, and this will hopefully prompt some questions about the future of Bitcoin as well. energy is your edge. So all of us miners focus incessantly on our energy cost. And so the cheaper we can get energy than the market, there's these controls ideas here that we have, like if you have rooftop solar, I know some people that do some fun things at home just as a hobby. Hosting services. Obviously, I come from a hosting service background, so we run data centers on behalf of customers that want to run miners, and that can be a really profitable way to get into mining. And obviously, at a large scale, we look at energy generation options. Scale does give you some advantages. My rule 2 is always beware of bear market. So for a miner, the bear market really kills us. Can really kill us really quickly, because we're not just reliant on the Bitcoin price, we're also reliant on our energy cost not being too expensive. So sometimes that ratio gets really bent out of shape. My first bear market, totally destroyed me. My cost of power was way too high. My machines were way too expensive, and yeah, I learned a lot of lessons in that. So it's so interesting, we didn't see it this time around, and this is one of the big changes. Usually in a bear market, there's a collapse in the network hash rate. This time was different, actually. This time in our bear market, the hash rate kept going up. It went up every month, and most of us were just sitting there like, what the heck is going, who is buying these miners? And it's really because nowadays it's such an industrial industry. The plans get made for 5 years in advance, and that they're just going online. They're already funded. They don't care about the Bitcoin price. They need to go online. The shareholders said so. The director's on my back, etc. So hash rate is a hash race. So if Bitcoin mining is profitable, people want to do it. So that drives the network hash rate up over time, and it's a compounding effect. So 20% of more hash rate usually comes along every 6 months. So we get a 20% rise, and that's been happening for a long time now. Now, the hash rate does get also more efficient, so it's not necessarily a 20% increase in power usage, but actually it's a more and more thing. So you go, timing is tops, and as always, again, this is not financial advice, but this is a little decision matrix that I use, and again, a lot of the insiders of the industry use. Understanding that there are right times to make Bitcoin mining plays and wrong times to look at it. And then calculations, not certainty. So ROI figures on miners, it's not a yield, for instance. You know how sometimes there's like a set yield on an asset or something like that. Some people think when there's an ROI, it's like the ROI is like 150% per year after power. It's like, that's what it's trading at today. That's what today looks like. It's a calculation. We use that to value what you're buying today. Is it cheap or is it expensive? Not. And some people get really excited. They're like, we should buy 5 miners and retire. It's like, no. Don't do that. That is financial advice. I'll be happy to talk to your financial advisor. Yeah, right. So understanding the movements of a market can always help you to understand where to make the right moves. Is something I use. Awesome. Anyway, here's the connection page with me as well. I hope that wasn't too much information. I haven't just like melted your brain or turned your face off or anything like that. Because I would love some questions.
Oh, I got one to start. I'll get it started. Okay. So first of all, there's going to be in 2 parts. So you talked about the hash rate and where does one find that hash rate? And then you also talked about the drop-off effect. How does that impact the price of Bitcoin?
Great question. So actually, philosophically, in the mining community, I'll answer the first one. Super easy. Google Bitcoin network hash rate chart. There's a really good chart by YCharts. There's a really good chart by Brains, and also a really good chart by a company called Luxor. And it's literally a live chart. It's updated in real time. So super cool things. I think even blockchain.com has a hash rate chart. So it's a number. If you run a node, I can tell you how to run the cool command in CLI. No one's that nerdy. Don't worry. The second question. So how does hash rate and the hash rate dropping impact price? So we debate backwards and forwards. Is hash rate a leading indicator of of price action, or is it a trailing indicator of like what's happened in the price? And I'm on it's a leading indicator side, because that seems to be what's always happened. So
Based off of history, we
Yeah.
have a pullback, which we're having now, and then after the halving, the price goes up. So I'm just trying to understand, how does the hash rate
Yeah.
dropping
So
make the price go up?
I was about to go into that. So how and why it works. So basically, what's super interesting is that the hash rate going up, like we've seen before this halving, I think has been a bit of a leading indicator. It means that basically the new Bitcoin coming onto the market is undervalued. So miners have been like, we think you're not paying us enough for our Bitcoin. We're holding on to it until the market goes up. So more hash rate comes online, miners hodl their Bitcoin, and eventually we get a market. What usually happens as well is that why the price, I think, often goes down is that the market is responding to the fact that usually miners have to turn off, right? They just have to turn off because they suddenly became unprofitable and they didn't want, it's too expensive to mine now, at least on that hardware. And also they're factoring that miners will have to sell their Bitcoin into the market to pay their power bills, maybe for some months, maybe for some years. And then they're also trying to play the game that, until, miners are also going to be selling hardware. Maybe it's going to cause some instability in the block times. So it creates an unknown, it creates more uncertainties. So the market's going from known to unknown. And usually that's why price around a halving drops. This time is interesting. It's really interesting.
We've got the supply and demand from the ETFs.
We have a different buyer. So obviously, I think we see a little bit of the pattern, like we went up to an all-time high and then we didn't go to 100K. We just kind of, dipped down a little bit. We've been mucking around now. So
It's the first time that they've hit an all-time high before the halving.
Again, so this is already in uncharted territory. So this is kind of where I step back and go, I don't know. I can only look at
all the answers. Okay,
Yeah.
let's open it up. Who we got a question? All right.
Yes, hello.
Hello.
If you can show quickly the first diagram you showed, if that is possible. If you go back, I don't know how many slides that was, 6 or so.
That one?
Yeah.
Yeah.
That one. The time it takes to mine a Bitcoin takes longer the more you've mined.
No.
Not necessarily?
Oh, okay, hang on. Just let me check the question you're asking. So are you saying so each epoch to get the same amount of Bitcoin, it will take me, like, let's say double the time, go simply in halvings for the same amount of Bitcoin?
If you've mined one block now and mined one block 10 years from now, would that block that you've mined 10 years from now take longer?
No.
Not necessarily.
It'd be, so Bitcoin also has a self-governing mechanism in it called the difficulty adjustment. So if, for instance, half the hash rate disappears, that will mean that block time speeds up. And so I think it's about every 2 weeks, the Bitcoin network looks at itself and says, what's our average block time? And if it's too quick, it adds an extra number that the world needs to find. So it adjusts the time back to 10 minutes.
So does that mean that straight after a halving, you have a point where, let's say there's 30% less resources, but the time still thinks it's up, when it was at 100% capacity?
Yeah. So when there are, and it's not so much a halving, but the network hash rate dropping, if it drops too quickly, the network will speed up the network will slow down because the time to find it is got a difficulty of a higher level, and there's now less people trying to find that more difficult number. So it takes a couple of weeks then for the block time to come back in.
Would that mean as a miner, would you turn off for those until that next, because if obviously you have less people, but if the amount of people that let's say 20% dropped, right? But the hash rate has only gone down 10%, would that be then still profitable enough for you to try to fight that difficulty? Even though
because it's in equilibrium. So the blocks are taking slightly longer, but there's also 20% less people. So the blocks take longer, but you're sharing them with less people. So it's a kind of a zero sum game. So your blocks sure, there are less blocks per day, you say, by a few percent, but because you now have to share the rewards you got with fewer and fewer people, if the price remains the same, then you reaped the same amount of rewards. Does that make any sense? Or inverse, then the opposite happens. In the inverse situation where there are more blocks mined more quickly, like when the network hash rate is going up, then again, the same thing happens. You're now sharing more rewards with more people.
All right,
Yeah.
I think you guys can turn that into a beer conversation because it's hurting my
Sorry.
brain. All right, I'd like to see who else has a question. All right, I am going to be a bit biased and go for a female.
Well,
I'm interested in the transparency of the market. So,
Yeah.
for example, if I'm a company and I know that your competitive edge is 7 cents, why would I not just say 9 cents? I'm going to give you a ratio, or build my contract to ratio me profitability and you profitability. Like, how does that impact market?
That's such an interesting question, because it honestly will depend. Yeah, it'll honestly depend on. Oh, sorry. It'll depend on whether we dance or not. It'll depend on I suppose, the counterparty that you're negotiating with. So let's say a very blockchain aware counterparty will have an understanding of this. Hey, they'll know miners have to turn off at 7 cents or 6 cents. So they will negotiate with you far more aggressively versus an energy aware company that just wants to make a profit.
So you're relying on asymmetrical knowledge. You're relying on them not knowing, basically.
Even not knowing, at some level, at some level, yes. But then also at some level, no, because we're in negotiation for one project right now, that we are actually offering a co-mining, like part of the rewards are actually part of it. So we will pay obviously a cost of energy, but there will be a percentage of the mined rewards that actually go to that energy partner. And that can be really, really lucrative for an energy company.
I find it really interesting because it kind of distorts the natural market, because it's such an unusual market to have that level of transparency. So I think it's really interesting. Thank you.
Yeah, no,
Good question.
Really great
All
question.
right,
I love
know you've been patiently waiting, so I'll come back to you.
I have two questions. Sorry.
Great.
Daniel.
We've got one question here as well.
Okay.
haven't
So,
forgotten.
so the first question was with the power and efficiency
Mm.
is the double-edged sword. So you've got getting your energy at a reduced price, but also getting more efficient equipment. So getting
Yes.
updated equipment. So my question is more about, does the tail weigh the dog or the dog weigh the tail? So does NVIDIA tell you the new equipment that's coming out, or do you specify what you want from your equipment and they go and design and build it and manufacture it for you?
Again, here's the crazy thing about Bitcoin particularly. All the stuff is open source. So the SHA-256 algorithm from the chips that we need was invented way back in the 70s by the CIA and then became open source. Yeah, no, that's the conspiracy theory, right? But no, it was an encoding algorithm for secret messages in the Cold War that the CIA used. And then it became open source in the 90s. So the actual shape of like on a chip of what makes a SHA-256 hash, everyone knows. And so companies like, well, not NVIDIA directly, but there's companies like Bitmain and Intel were competing in the industry for a while, MicroBT. They know exactly what it is we want. We want lower watts, more hash. And so what they're doing is they're constantly working out ways of cramming more of those compute units onto a single chip. And so it's, again, a pretty zero-sum game where they're just going at it, hammer and tongs, and who can get the smallest, most efficient chip is going to win. So,
yeah. One more, if I may. Okay, so the other one with competing for power. So it was David Lin, who's ex-Kitco. This is how nerdy it was. I actually watched one of his interviews just before I came here, and it was talking about this utilization energy and that sort of stuff. And one of the things that was talking about was that, okay, it takes a lot of power for Bitcoin and whatever, but it also takes a lot of power for the increase in use of AI and ChatGPT and stuff. So if there's a miner that sort of bows out of the mining race, is there an opportunity for that business to then pick up on the server, the AI server type stuff? And does that actually happen?
Yes. And there's actually an area I'm like, there's very much right down some of my niche actually. So, all the projects I'm designing at the moment have a redundancy use case for being backup, like basically being backup for server centers, like server data center space. Ideally for AI, because we can't always guarantee 100% uptime. But with very minimal capex, we could turn into an AI farm instead of a Bitcoin mining farm. So we're building our infrastructure around flexibility in that space. I've also done consulting projects on literally, hey, how much is it going to cost us to turn our mining farm into an AI farm? And the answer is a huge amount of money, but it is happening. The answer is absolutely yes. Yeah.
Are the miners, any of the miners, lobbying the government?
Oh,
Okay.
yeah.
Are you as miners as a group lobbying the government for nuclear power?
I would love to. Nuclear power is like.
You just have to lobby the government because, they're not far off. You just have to lobby them.
Yeah. I think it's an interesting thing talking about like lobbying. So we're in some of the smaller countries where we operate, we're actually coming in at a government level, talking to them about their energy market essentially, and oddly enough, helping them make it more efficient because it benefits us.
We're one of the very few countries in the world who's not going nuclear.
Yeah, and it's a fantastic energy source. Yeah, again, I've been quite far down the rabbit hole on the energy industry. I would be any opportunities to lobby government if there's any things out there, please. Tell me about them. Oh no, I'm not. No, I'm not going to Canberra. Not me. No.
All right. Wait.
Have enough solar energy here?
Do we have enough solar energy here? Is that what the question is?
Yeah, we have about 5 times more than we actually can use. Because the again, it's a huge conversation, but solar energy is on when we don't need it. So our energy, we're nighttime creatures here in the West. Like we use all our energy. Batteries are hugely expensive, like because everyone needs them and everyone wants them. Yeah, potentially. So the cool thing is this is these problems are producing innovation in the space. So people inventing new battery tech, us dealing on the mining side, like there's awesome business that's doing load balancing using mining. So when power's profitable, they mine. When it's not, they push it back to the grid. They use a bit of batteries. So it actually here is a great opportunity with renewables because they produce so much more energy than we need. So.
All right. One last question before we wrap it up. So, I get people all the time say to me, "Oh, that Bitcoin thing, it's so bad for the economy." So what's a good response for me without like opening myself up to a million more questions?
Yeah, a great response is like, "Hey, do you want to get a beer with me?" No. The response I usually use, look, there is no 5-minute response that's really going to encompass it all. But it's like, look,
I say, here's my friend Daniel's phone number. Call him.
Yeah. And yeah. But no, my usual response for people is like, it's not actually what you think, and it's not what it seems. Energy is very complicated. And Bitcoin itself is actually, I usually give them some brief viewpoints, like actually Bitcoin, because of our incentives for cheap energy, is helping to innovate in this space far more quickly than we would if we were just trying to sell to the market. Prior to Bitcoin, we needed to have human beings as the reason to generate energy. Now we've got a reason to generate unlimited energy. And I always say to people, hey, just wait. If you want to talk more, blah, blah, but I'm like, it's not, the usual thing is it's not what it seems. You've been told wrong.
It's not what it seems. Oh, an online, question.
Awesome.
Yeah, we'll give our online question an opportunity. Zoom participant Lee asks, what price is reasonable for Bitcoin after the halving?
Oh,
This is not financial advice.
No. Like the great thing about when I say this, I'm dealing with publicly available numbers. You can go and check a hash rate. You can go and Google the price of a mining rig, and you can Google what the efficiency of a mining rig is. So you can do all these numbers for yourself. But my best kind of level estimate is about 7 cents US. So that's 11 cents per kilowatt hour.
Oh, you're talking about the price of mining. I thought you were talking about
yeah,
the price of
price of
Bitcoin.
energy.
I don't know. I want to know the price of
was it
Bitcoin.
saying the price of Bitcoin? Oh, the price of BTC. Okay, no, thanks for that clarification. That is going to depend on your cost of energy. You reverse the calculation, your cost of energy and your efficiency of your mining rig, like how efficient it is at turning electrons into Bitcoin. So you basically have to choose your risk point. So some of our larger projects, we've chosen sub 20K as our break-even spot. So we're building to sub 20K prices. So we want to be paid a multiple from the get-go by the market. Maybe it's like, how low do you think Bitcoin can go? That's not a financial question, I know.
Oh, I don't know. I think that's definitely a beer conversation. But let's give it up for Daniel. I think that he's very, very knowledgeable. Thank you, everybody that tuned in online. He will be sticking around for all of you that still have some questions. Now, I just want to mention something that Matt maybe forgot to mention because maybe I hadn't shared that information with him. But please keep your eyes and ears open. We're actually going to be doing a like a contest on who can guess the price of Bitcoin on May 22nd by 6 p.m. And BitCat will be giving away some Bitcoin. So I'm just waiting for those final details. So we're kind of making it a little bit fun, gamifying it. There will be a time limit. We're not 100% sure. So it might be like 2 weeks before. So you've got to put your guess in 2 weeks before, and then we'll be giving away the Bitcoin on the night of. It's going to be a bit more of a fun event. We're not going to have anybody up here like presenting like Daniel did today. It'll be kind of short and sweet. We're going to do trivia. So it's more about just like a little bit more of a party style, giving away lots of prizes, etc. So please keep your eyes and ears out for that. And always, if you want to stay up to date with us, please connect with us online. We're trying really hard. We've always been local based, never really kind of grown online or done online events. So we're really trying to focus on kind of growing those socials. So we appreciate your support. And I'd also like to acknowledge all of my students that are in the room, because each and every single one of you are here are actually walking the walk. You know, you're not only studying, but you're here, and it's absolutely amazing. And thank you for everybody for turning up. And let's drink the bar dry. Enjoy the rest of your night, and we'll see you on May 22nd. So just remember, not the first Wednesday. We've switched it to the third Wednesday, May 22nd. Thank you very much, and thank you everyone online.